Hello, welcome back guys to another webinar. So today we're going to be talking about trading plans. I know that a lot of people don't know what a trading plan is, and if they know, they don't know what it should have or what it's about. So we're going to go over it today, and hopefully it helps a lot of you. So what is a trading plan? So a trading plan is basically an outline or a blueprint that helps you in trading. So basically it tells you this is what you should do, this is what you're looking for. Like it tells you the exact things that you should know already about the way or the style of your trading. So here are a couple of things that we're gonna go over. So you should know what trading session. That's basically the first thing you always have to know. What time that in the market that there's volume that you will be trading. So it's gonna be you have three major sessions, which are Asian, London, and New York. Excuse me. Asian, London, and New York. You have to pick which one of these is best suited for you. Is it Asian, London, New York? Which one is best? Okay. Then we have, so basically how long are you going to trade? Are you going to be trading for 1 hour, 2 hours, 3 hours? So that will depend on the session. If you're a scalper or a day trader or a swing trader, these things vary from one person to the next. That's the first thing. So for example, if you're going to trade London session for me it runs from 3 a.m. or 2 a.m. until 4:30 a.m. So that's around 2-3 hours, give or take. So that I might be willing to trade, or I trade the New York session, which is the opposite. So that's something you should look into. Then what pairs are you going to trade? So to pick a trade, it depends on the session you're trading. So for example, if you pick the Asian session, you're going to be trading any pair that has JPY or has New Zealand or has Australian dollars. So that's for the Asian session. Why? Because during the Asian session, you have the European markets are closed and North American markets are closed. So that means the only thing that's going to be moving a pair is going to be the Asian pairs. And if you look into the London session, you're going to be using a pound, Swiss franc, or the euro. Why? Because during the London session, the Asian session is closed and the North American session is closed yet too, that means the banks are closed, so there's no volume or movement. And for New York, it's going to be a bit different. So you can trade USD CAD, USD, the Canadian dollar, pound, and the euro. Why? Because during New York, London is still open. There's still volume in London that comes from London to the New York session. So you could trade these pairs. So that's one thing you could look into. Then we have how many trades are you planning to take? Are you planning to take one trade, 4 trades? How many trades are you taking during that day? For me personally, I stick with the three rule. So basically, either I get 3 wins, 2 wins, 1 loss, or 2 losses, and I call it a day. That's the three rule basically. If you use this, then it should make things easier and it wouldn't complicate things. So that's something you should look into. How many trades are you willing to take a day? Then we have what are the requirements for you to take a trade? Okay, so let's say you have a setup that you want to trade and it's good. What are the requirements for it to trade? So basically it's like confirmations. So you need to know our candles are closing, retest, Fibonacci, engulfing candles, whatever it is, that should be a requirement for you to take a trade. If these things are not met, then the trade is not good for you to take. That's something you should know also. Then we have your stop loss and your TP. This is something very, very important because most people only focus on take profits and they ignore the stop loss, but it's quite the opposite. If you have your stop loss put in a proper place, then you could manage your TP. So for example, how big is your stop loss? Is your stop loss 10 pips, 20 pips, 40 pips? That's something you have to know before you take a trade, before you even think of a trade. So basically, when you see a setup, you want to trade, you have to look at the stop loss. How big is it going to be? And then, are you willing to place it? So basically, let's say your stop loss are at 30 pips. Are you okay with it being at 30 pips, or you think you can just let this trade go and look for the better setup that has a better risk management factor into it? Then your TP is going to be the same idea. Where is it going to be? So for example, if you're one of the people that trade based on RR, so basically your risk to reward, which is, for example, 1 to 2. If your risk is 20 pips, that means your take profit should be 40 pips, which is quite big. So these are things you have to look into and make sure is it realistic and within the time frame you're trading. Let's say if you're trading 3 hours, is 100 pips or whatever pips you're targeting, is it realistic? If not, then try and find something that works for you for the session, for the time you're trading, and for it to be achievable in that time frame. Then we have risk management, which is very important and a lot of people ignore it also. So how much are you willing to risk, and how would you risk, how would you manage it? For example, so let's say you plan on risking $10. Are you gonna let the whole $10 go away, or are you planning to manage it and see how you could work with it? Then we have the type of setups you would like. So basically you're looking for, this has to be something specific that you've seen, you traded before, and that worked. For example, let's say you trade in double tops. So when you see a double top, you know that you know where you should be, you know where your stop loss is, you know where your take profit is, and that this is something you have to, a lot of people ignore and not a lot of people talk about. You have to look for something specific that you know is gonna work and it's gonna be good and profitable for you. That's one. Then you have how to identify the setup is good or not. So for example, let's say you're looking for a double top and then something doesn't happen the way you want it. So these are the things, red flags that you need to pay attention. So basically, as it says here, you must know if the trade setup are going to take, are they the trade that you're going to take, is it a quality trade that's going to give you a potential to win, or is it just a trade, or are you just taking a trade to take it for the sake to take a trade? That's the difference. You have to always look for a trade that is high quality. You don't, quantity is not important. If you take one trade and it's 80% profitable, then you're winning basically. So always try to look for a trade that has a high probability or quality for it to win. Then we have what confirmation and entry triggers that you will be looking for, which is basically, like we said before, candle closing, retest fibs, and all that stuff, and whatever else you guys use. Then we have what's your exit plan and under what condition is the trade no longer valid. These two go in hand. Why? Because the exit plan, you always have to have an exit plan, and at the same time you have to know at what point is this trade not good enough for me anymore. In this case, you need to know a couple of things. What are the things you don't want to see? For example, let's say you have a double top. You're like, okay, you know what, I'm going to trade a double top. The moment it breaks the neckline, I'm going to take a trade. For example, the neckline gets broken, but you don't see a close below the neckline, so that's a red flag. You shouldn't be taking the trade. Or if you break the neckline, then you go back in the range again, so that's something you don't want to see. These are little things that you should always be worried about, and they should give you red flags, tell you, hey, I shouldn't be trading this because it may not work the way I want it to. So that's something you should always look to, and always try and exit with a minimal loss, or zero to minimal loss. How to protect your capital, which is basically risk management, but in a different perspective. So you have to pre-risk manage your trades. Basically, like I said before, if you plan to risk $5, for example, you have to manage the trade at the same when you're in it. You know, just like, okay, you know what, I'm just gonna lose $5 and that's it, 1% of my account, and I'm fine. You have to try and make that loss smaller. So as it says here, risk management. Manage your trade and make sure you don't lose more than you should. So if you, like I said, if you plan to lose $5, which it says here, if you plan to lose $5, try and make it $2.50 instead. Why lose more when you know the trade is not working out your way? If the trade is not going to your way, just close it and end it with a smaller loss, and it's basically a win for you. Why? Because instead of losing 1%, you only lost 0.5%. That's something you should look into. Then, what time frames you should be looking into to trade? So that's another thing. So are you looking for higher time frames, lower time frames? Are you trading on the daily? So these type of things you have to know. This is something you always have to know. What time frames will you use to trade, and why? So if you're going to use a higher time frame, why are you using a higher time frame? Is it because it's a higher confirmation, or is it just because it's slower and you want to see things slower? Are you trying to use the 1 minute, the 5 minute? These things you should always look into. And then there's one thing that you should already have it. doesn't have to be in a, well, for you to be a trader, you have to have it, which is emotional risk. So when you can manage your risk, your emotions, I mean, when you can manage your emotions, trading becomes very easy. Why? Because if you can manage your emotions and you don't get affected by a loss or by a win, then trading should be easy. It should be just repetitive work. Nothing changes. It's the same thing over and over and over, and that's how it is. Psychology is one of the biggest things that nobody talks about, and I have a specific webinar for it. You guys can watch it if you want, but that's up to you. And with that being said, that's what a trading plan is, and that's what you should guys have in it. And thank you for coming and listening, and I hope you guys have a good trading week next week, and see you again. Ciao.